Hello, everyone. I hope your day is good to you. I hope your week is great to you. I hope many blessings and opportunities come your way. For those who do not know me, my name is Ramera, aka Mara the Goddess. A little bit about myself: 29 years old, stay-at-home mom to three wonderful boys, and I rob banks legally, and I'm here to teach you how. So if this is your first time watching me, I just want to welcome you to my channel. Thank you so much for listening in today. We are going over the Candlestick Trading Bible. This is a free download on any of your internet browsers, or you could be able to use the link, my Amazon link below. When I first started out, I just downloaded this book. I printed it out, put it in a folder, read it, studied it, did my homework, and the rest is history. So here I'm trying to teach you guys for free. So if this is your actual first time, I definitely want to let you know we have already did um some other videos. We have been over a lot of content so far, so you are in the wrong place at this time, but you are still at the right moment of your time. I'm sorry. All right, so we've been over the introduction, history of candlesticks. What is a candlestick? Candlestick patterns, the exercise, market structure, pin bar so far that we are in right now. So I want you to stop watching this video, go to the previous videos, and I want you um, to watch them, study your charts, do your homework, and come back when you get it to this video and you got it. So if this is your returning time visiting me, I just want to say thank you for coming back. Thank you for liking, subscribing, and sharing to my channel. Okay. This week we are going over trading tactics. I think if time does permit us, I do want to go over trading tactics, trading pin bars with confluence, and then the pin bar trades examples if time permits. If not, then I'll just do like a part two video, and then just drop it on the same day for you guys, so that way you can have it back to back instead of having to wait. I'm not a TV series. We do not have to wait and wait and wait and wait and wait. Y'all know those TV series that's like, it's so good. Then stay tuned for next season. Like, what the hell? Why did you leave me like this? So I'm not gonna leave you like that. I will do the part two and drop them both at the same time, if time permits. They're gonna be talking, so I need to shut up and get to the point. Because trading pair bars in the range bound markets, that's a little bit lengthy, 6 pages, and I don't want to overdo it with you guys. So let's get into it. Let me shut up and let's go. All right, trading tactics. When we identify the trend, uptrend or downtrend, and the level, support and resistance, we find a pin bar near these levels in line with the direction of the trend. The second step is to know how to enter the market based on this candlestick pattern. According to my experience, there are different entry points, different entry options when it comes to trading pin bars. It all depends on the candle anatomy, the market conditions, and your money management strategy. Number one, the aggressive entry option. This method consists of entering the market immediately after the pin bar closes without waiting for confirmation. So this strategy will help you catch the move from the beginning, because sometimes the price goes higher after the close of the pin bar. And if you are not in the market, the trade will leave without you. See the example below. All right. It says the chart above shows how an aggressive entry can help you to execute your trade in the right time without being left by the market. And as you see, we took this trade because we had three important elements: the trend the market was trending down in this case. We look for selling opportunities. So that's what we're looking for, those selling opportunities, the level. In the chart, we had a support level that becomes resistance, and then the signal, a clear pin bar that was formed after the retracement back to the resistance level. All right, that's that support and resistance line that they have. It broke and became a resistance on the retest and rejected. And then the entry of the pin bar setup. All right, when you have these three elements in the market, you just place your trade out of the close of the pin bar and your stop loss above the long tail. Your profit target will be the next support level in case of a downtrend. These three elements are quite enough for you to find high probability entries in the market. The conservative entry option. So this is your second option. This entry consists of entering the market after 50% of the range bar retracement. This strategy sometimes will work and it gives you more than 5-to-1 risk to reward ratio. And sometimes the market will leave without you. See the illustration below. All right, it says the illustration above gives us an idea about the power of conservative entries. As you can see, this entry method helps us decrease our risk and increase our rewards. The trade above has more than 5-to-1 risk to reward ratio. One trade like this every month is quite enough to generate a decent income. See another entry below. Let me highlight that. One trade like this every month is quite enough to generate a decent income. I'm gonna make that money grain. All right, see another chart below. Here's our chart below. It says one of the drawbacks of this entry option is that the market sometimes doesn't retrace to 50% of the range bar, which will make you feel frustrated because the market will move to the profit target without you. There's no wrong or right entry option. They both work great, but with screen time and experience, you will be able to decide whether to trade aggressively or conservatively. Conservatively. All right. That was just easy. All right, so trading pin bars with confluence. Confluence happens when many technical indicators generate the same signal. This trading concept is used by price action traders to filter their entry points and spot high probability signals in the market. It doesn't matter if you're a beginning or advanced trader, trading with confluence is a must. Because it will help you focus on quality setups rather than quantity, and it will enhance tremendously your trading performance. Confluence means combination or conjunction. It is a situation in which two or more things join or come together. For example, if we are looking for a pin bar signal, we need to find other factors of confluence to confirm our entry. We are not going to take any pin bar that we find on our chart. Okay, we're not just taking any pin bars. We need to have that confluence. All right, factors of confluence, the trend. It's one of the most important factor of confluence. This is the first thing that most successful traders look for on their charts. You can't trade any setup without identifying if it is in line with the direction of the market or not. A bearish pin bar in a downtrend is more powerful signal than the one in a range-bound market. Okay, and we got support and resistance levels and supply and demand areas. These major levels have a significant importance in the market because all big participants watch these specific areas. Okay, we have the option moving averages. I personally use the AM21. This technical trading tool acts as a dynamic support and resistance. And it is a very important factor of confluence in trending markets. And that's a gem. Uh, we have the Fibonacci retracement tool. I use the 61 and 50 percent Fibonacci retracement to find the most profitable areas in the market. Okay, we got trend lines. Drawing these lines on your chart gives us an idea about the market direction and helps us find the most important reversal points in the market. When you are analyzing your chart, you are not obligated to find all these levels to determine whether the trade is valid or not. If you can find just one or two factors of confluence that come up together for good pan bar setup, this is quite enough to make a profitable trade. For example, any obvious pan bar signal near support and resistance level in line with the direction of the market. See the illustration below. Okay. All right, says in the example above, we have a high probability setup with four factors of confluence. The trend, the market is trading up, which means that we have to follow the trend and look for buying opportunities. Number two, the level. The support level is an important key level in the market. As you can see, price broke out of the resistance level that becomes support and pulled back to it. Number three, okay, broke that resistance, came back as support. All right. Number three is the signal, the formation of the bullish pin bar after the retracement back to the resistance level that becomes support. All right. So once it broke, came back to the, at that time it was this resistance level, and now it becomes a support level. That pin bar is formed. She goes up. Then it says another signal, the rejection of the pin bar from the support level and the 21 moving average that acted as a dynamic support level. All these factors work together to give us a powerful trading signal to buy the market. Okay, 21 moving average, right at the support level, touching it. All right, see another example below. Here we have another example. It says the example below shows four confluent levels that indicate a powerful trading signal. The first factor is a bullish trend, and the second one is the resistance level that becomes support. The third one is the 21 moving average that acts as a dynamic support level, and the last factor is the pin bar formation near these levels in line with the bullish trend. If you adopt this trading concept, you will completely change the way you perceive the market, and you will start trading like a sniper by waiting for the best trading setups to come to you instead of trying hard to make trades happen. All right, pin bar examples. Says I will give you some trading examples to help you understand how to trade the pin bar candlestick pattern with the trend, and how to use the confluence concept to confirm your entries. See the chart below. All right, this is the NZD USD daily chart. As you can see, the market is trending down. This is the first information that we gathered from the chart. After the breakout of the support level that becomes resistance, the price retraced back to this level and formed a pin bar candlestick pattern. Okay, broke out as first this was a support, broke, became a resistance, pin bar is formed. Right? The formation of the pin bar near the resistance level indicates that the retracement move is over and the beginning of an impulsive move is likely to happen. When we put the 21 moving average and the Fibonacci retracement on the chart, we see the pin bar is rejected from these levels, which indicates that the level is very important and sellers are willing to push the market lower. Here is this example. Here in this example, we have a solid reason to sell the market. The first reason is the downtrend. The second reason is the formation of the pin bar near the resistance level, which indicates the end of the pullback and the beginning of the new move downward. The third is the rejection of the pin bar from the resistance level and from the 21 moving average. The last reason is the pin bar rejection from the 50% Fibonacci retracement level, which is considered to be one of the most powerful key levels in the market. Look at the chart below to see what happened. Okay, and that's what happens. It says, as you can see in the chart above, our analysis was right because it was based on solid reasons to enter the market. This is the method that I want you to learn to be able to trade the market successfully. Look at another chart below. All right, it says the chart above shows two important buying opportunities. The market was trading up, the formation of the first pin bar after the retracement back to the support level was a high probability entry, which confirms our entry is the rejection from the 21 moving average and the 50% Fibonacci retracement. The same thing happens with the second pin bar that allowed us to enter the market again and make more profits. Okay. So let's see. That's our chart. I think we were using this one. All right, let's just use this one right quick. I should like it right here. All right, so we are on EU, Euro, USD. I just marked my resistance level. On the daily time frame. All right, so let's figure out our confluences. All right, we know that the market is trending down. All right, that was at once a support. It broke that support, became a resistance, came back and retraced. All right, these are another. We're at the resistance level. Also with the resistance level, we're at that 21 moving average that it touched. Pin bar is formed. Well, pin bar is formed first, touches the 21 moving average and also that resistance level. That gives us an indication to sell the market. They said they want you to have your stop loss above that pin bar. Click. Let's do it like this. So your stop loss will be right here. All right, you enter the trade, and so it says you have the two options. We have the aggressive option, and then we have that conservative option as well. Um, the trend, the level, the signal. Aggressive entry, but so it says enter the pin bar. um I mean enter after the close of the pin bar setup. So we would enter here. So it look like something like this. After the close, put our stop loss here. And then you take it down to that next support level. So in this case, it'll be right here because this where the support level was. Or even if you just take it right here, you could, but that doesn't really gives us a, yeah, doesn't even gives us a 2-to-1 risk reward. So I will probably put it right here next to that support level. And I actually like that support level as well. Gives us over a 2-to-1 risk to reward ratio. High probability set up there. All right, so one, it's aggressive, but we got it. It was the trend. In this case, we are going down. Number two was the level. Um, it is a resistance level. And then we also have that 21 moving average. Searching 21 moving. And then number four, we have the signal. So you only need two downtrend. But in this case, we could have just used the resistance level and we could have used that as touching the 21 moving average. Signal was formed. And we sold. All right, so that was our confluences in this case for the pin bar. Okay. Confluences to see. Let's put that. I don't like that. All right, so that's good. And I know we had another pin bar. I want to see if we can get it in the uptrend. I technically don't want to use this because we actually haven't broken this yet. So I'm not gonna use it. I'm sure we'll get a good one for us. We can kind of go with this, but that looks more like a doji. That's a false one right here. See. Let's look on the forward time frame. So this one is kind of like a small one because, like I said, technically we haven't broken the previous high on the daily time frame. Jump down to the floor, it gives us a little bit more data that we could be able to use. So yeah, All right, so I'm gonna put this right here. At first, resistance level came back and she sold down, and she finally broke out, sat there as a support level, and then she went up. So it's actually two of them here. Got a little bit more body, but I could consider it. Here is our pin bar. But I like this one better as well. All right, so in this case, confluence, we know that it is we have a trend. In this case, it is a buy. Number two, we have the support level. All right, we got that 21 moving average that is touching. And then we have the signal. And you can use this one, or you can use this one. Gave us another opportunity to buy the market. And I want to change the color and make this, oh, sorry, bold, good. All right, and so if you didn't get in on that first one, right? Let's just say we getting in on the second. I want to say the first one. I like the first one because what will happen, all right, never mind. We can go with both of them. So let's use this one here, right? We are going to buy after the close. Stop loss is and we taking it to the next resistance level. Good level, right? It just was right here. We had it for the previous one. Okay, that is beyond the 5-to-1 risk to reward, right? Even if you entered in right here, we still had that stop loss, but it never touched that stop loss, which is good. Now it gives us another entry to buy. You're gonna enter right after that close of the pin bar. Stop loss is below that wick. Okay. So let me just zoom in right quick for you to break it down. And then we taking it to that next resistance level. All right, so let's break this down. All right. What's my arrow? Even right here, prior we waited, but we would have got taken out right here. So how could we avoid that? Even if it got taken out, I would have said get back in because even look at this close. It didn't close. One, it didn't make a lower low. It didn't um have a break of structure. And it closed with the bulls pushing it up. So we could have got back in. And then she took us with both entries to our next resistance level, which was great. 102, 127, um, almost 230 pips we would have won on that trade and only risked about 40 pips. It's 19, kind of 20, 17. All right. And that's when you train your eyes, it would be simple. You could be able to see it. But the only way that you could be able to see it so easily and be able to mark it up so smoothly by training your eyes, knowing the psychology, knowing what the support and resistance level is, um, knowing what these patterns actually mean and how they look. Just even training your eyes to see how they look. Okay. So that was good. I told you I wasn't gonna keep you guys long, but what I forgot to do is give you guys a motivational quote for today. So let me pull that up right quick, and then I'm gonna let you guys go. Mm, this is this is different. It says each player must accept the cards life deals him or her, but once they are in hand, he or she alone must decide how to play the cards in order to win the game. Well, if that's meant for you, I will take it and I will run. I just realized that I did not eat dinner. So my stomach is cursing me out. We did what we needed to do. We have identified pin bars and the traded tactics. Next week, we're going to use the pin bar in a range bound market. Do your homework, study, train your eyes. I swear you will get it, but you have to be consistent with it. I can't promise you nothing if you're not willing um, to take the information that I have given you and implement it and execute it and do whatever you need. I got I I made poster boards with everything. I remember first starting off. I made flashcards. Do whatever you gotta do, but you gotta get it done. I am out. You guys have a great and wonderful day. I will see you next time on the next video or in social media. Make sure that you follow me on all of my social media platforms. Bearded Goddess 22. That is MARTHEGODESS, two number twos. Yes, I know it's only one D a goddess. That's how I want it to be. Also, make sure that you follow my Facebook group, the Goddess Tribe, and connect. Cause we in I am out. I will see you guys later. I'm hungry and I don't want to get hangry on here. And then y'all see another person. Bye.